It's time to begin our first formal session of the day, our first panel session on the topic of the Chief Risk Officer CRO role, a new approach to fraud risk management. And please help me welcome the honorable panel members for this first panel session of the day. The first session is always the impactful session. So please help me welcome, joining us first in the panel, Sugata Nag, Senior Vice President and Head of Credit Risk Corporate from Axis Bank. A big round of applause to Mr. Nag. Welcome to the stage, sir. Please have your seat. Joining next in the panel, we have Mr. Jaswant Kumar, EVP Risk Head from IndusInd Bank. A big round of applause to Mr. Kumar. Welcome to the panel, sir. Please have your seat. Joining next in the panel, we have Mr. Mayur Mittal, Fraud Control Head from Hero Housing Finance. A big round of applause to Mr. Mittal. Welcome to the panel, sir. Please have your seat. And now, ladies and gentlemen, the honorable moderator for this panel, I would like to welcome with a big round of applause Mr. Kushal Edwankar, Senior Product Manager, Fraud Risk Management from NICE Actimize. A big round of applause to Mr. Edwankar. Welcome to the panel, sir. Please have your seat. So, gentlemen, all over to you. And first panel session of the day. Looking forward to a great start.
Hello. Okay. Can everybody hear us? Okay. Good morning to everybody. So, as my colleague mentioned, it's a great start to the session today, focusing on new approach to fraud risk management, right? And probably an apt topic considering how the technology is evolving, and it's also about how fraudsters are using that technology today to perpetrate fraud, right? To start the proceedings, I'll just have a quick introduction about myself. So myself, Kushal Edwankar. I am a senior product manager within NICE Actimize, fraud fighter, I would say, since almost 15 years. And I kind of lead a team of R&D team and a product team delivering products, specifically focusing on fraud risk management, cutting across from account origination to transaction monitoring, working with global clients across all the regions. May I request our esteemed panelists to actually introduce themselves and also talk about their experience, please?
Yeah. Hello, everyone. Good morning, first of all. Myself, Mayur Mittal. I'm heading fraud risk unit for Hero Housing Finance from last 1 year. I have a total experience of around 20 years. I've worked with the different banks like HDFC, ICICI Bank. I started my career as a collection officer and then moved to fraud risk. So I have a wider view of risk management and all. Spent a good time in Reliance also. My hobby is swimming, and I also like to have some technical knowledge about growing AI in the market. So that is all about myself. Thank you.
Good morning, everyone. This is Jaswant. I work with IndusInd Bank. I head the risk for the unsecured portfolio as well as the fraud. I look after credit piece as well. 2 decades of experience. Have worked with HSBC for a large part of my career. Before joining HSBC, have worked with FICO also as a consultant. So pretty much have dealt through, the onboarding the client experience, then the transaction monitoring, then looking after the risk from each and every corner. I think my passion lies in database risk and the fraud decisioning. So that's about me.
I'm Sugata. I've been like about 23 years in risk, starting with market risk. I've been mostly in credit risk from last almost 16 years. In between, I've been heading risk analytics about 8 years or so. Right now, in the corporate credit side, primarily I'm looking at under credit monitoring part of it. So it covers credit frauds as well, which is one of the concern areas for us. So look forward to the discussion today.
Thank you, Sugata, Jaswant, and Mayur for introducing yourself. So we'll start the proceedings. So my first question is to you, Mayur, right? Specifically focusing on, as you mentioned, about your interest also kind of in the technology side, right? So what are your thoughts, or you can share your thoughts around how technology plays a critical role today in today's day and age from a fraud risk management perspective?
Okay. So as a fraud risk officer, I think I'm sitting at an intersection where I have a management expectations for scaling the business, and then customers' expectation of speed And I also have to meet the RBI's mandate on fraud risk as well, which with the master directions coming in 2024 regarding the same. When I see fraud risk management, I think when it started with the preventive, rather detective way of fraud management. Now moving it more towards preventive way of fraud detection. If I go back 5-6 years down the line, there was not much technology used for fraud risk. Now, like it has taken a big leap towards technology. Now everybody is talking about AI and everything. From fraud perspective, I would say it was after process system earlier. Now we are more into the system. Okay. So it is an ongoing process now. Earlier, we used to find fraud later on, and we used to do reporting. There was no time bound for that, so they used to book the losses. But now the process, it is fraud risk and monitoring is now embedded into the process itself. Okay. So it's throughout the journey, like from login till disbursement. Even after disbursement, we have to do a continuous monitoring into that. With this, we have to also take care that we are meeting the scales. We are consistent in fraud finding, monitoring is regular, and we also have to be consistent in this. With consistency, we also need to take care that RBI is also looking towards us, what was happening earlier, which is not happening right now. Like we were having earlier, we have to like report cases. Yes. Early warning signals system has come in. We have to red flag the cases. All those things has come in. I think all these things can only be met with the technology only. So we have to embed technology into our system. And for that, lot of things, new things have happened. We have started using AI APIs for early detection. We are now preventing the cases earlier than we used to do. Earlier, more of the time, we used to have a manual system where triggers used to come to us, then we used to go in the field and conduct the checks. But with the technology, that can happen while you're sitting at the office. So we can do our customer KYC, we can do video KYC, and we can identify. We can do NSDL, we can like hit the websites of the authorities, legal entities, and they can give us the results right now, which has come leaps and bounds, which is helpful in scaling of the business also, which is our primary job also, I think, of every company wants to generate revenue in this company. Besides this, I feel from monitoring point of view also, earlier we used to find a needle in the stack. Like we have a lot of information where we need to actually channelize our overall focus has changed now. So all the big analytics, big data has come in. We can do behavioral studies through using AIs and machine learnings. We can do linked investigations. So that has bring lot of vision for us as a fraud risk officer through technology, which is useful for us.
Thanks for giving these insights. And the two key things which I can see here is one is more proactive. That's one, and and the first thing which you mentioned about also growing the business, right? So earlier, the way at least I see it, like a couple of years back, it was about fraud risk management, but today it's also about how you can ensure that you have a good blend of fraud risk management, customer experience, and how you can revenue the growth. So all these three pillars have to be taken into consideration as part of your processes. That's what I could take it from your thoughts. Right? Okay, coming back to Sugata, right? So in your area specifically where you have experience around credit risk, right? What do you see how the landscape has changed specifically on the credit risk side, right, over last couple of years from a fraud perspective? Yeah.
Yeah, so if we look at it at a very overall level, fraud that's get reported today, by volume, digital frauds have really grown in the last few years.
Correct.
However, if you go a little back, there was a time where by value, credit frauds used to contribute to more than 90% of the total value of frauds reported. So while today we typically see that value contribution also having come down, but newer kinds of frauds are also coming up in a way, or it's getting more prevalent than what we had seen in the past.
Right.
So earlier, most of the frauds were dominated by the corporate side. I mean, the corporates, more on the, say, they might have, they might be related to the balance sheet fudging, or some of it might be related to, say, related party transactions, which were not necessarily kosher. But what we see now more happening is that on the retail side, we see a lot more new kinds of frauds coming up. So, of course, some of them had been earlier there, there earlier as well. But one of the things that we see increasing is kind of impersonation. So essentially, somebody's taken a loan, you think that that entity, the person is somebody, you have done an analysis based on that, you have given the loan, but then you realize that that person is not actually the person who's taking the loan. It's somebody else who's impersonated that person and taken the loan. So you realize that later on when the money doesn't start coming back. So these are one of the new types of frauds that we have seen in the last few years or so. The other area which is also kind of, I wouldn't say growing up, but obviously in contribution terms, it's kind of there where we see in terms of the collateral. So for example, there's been relatively recently that there have been a lot of these cases where you have gold loan frauds, where the gold really wasn't genuine, which you have seen in quite a few banks here and there. That is one area which is happening. Similar thing on the, say, mortgage side, you might have a case where on the same property, more than one loan has been taken. But this is something that had used to happen earlier also. It's just that probably the scale and the contribution is kind of going up. So these are some of the trends. If you look at it, this is what is happening in terms of trends these days, is what I'm seeing in terms of the relative changes that I'm seeing in this area.
It's interesting because, as you rightly said, it was more on the corporate side, but in recently you are looking at it on the retail side. I think the impersonation fraud which you mentioned, it was nowadays everybody wants to have access to everything online, right? Account opening is online. If you want, like, a loan is online, and we talk about giving the loan in 2 minutes, 5 minutes, right? So that's where I think what you're talking about is impersonation, where because you are behind the digital wall, right, and you are not somebody who we have seen in the past, and then now the challenge is to ensure that the customer experience is maintained, at the same time ensuring that that person is actually the person who is trying to apply for the credit, right? So that's where the synthetic identities challenges which come into the picture, which we see, right? So specifically focusing on that, around like synthetic identities or stolen identities, because I can steal maybe Mayur's identity and apply on his behalf, right? Or I can create an identity of yourself, even Jaswant's and Mayur's and myself, combination, and create a synthetic identity. So from that perspective, what kind of measures do you see can be helpful there, right? Specifically on the impersonations or processes which the team is putting in place today.
One of the things that have, obviously, as we see some of these frauds grow, you will typically want to verify the different documents across being sent. So,
Right.
If it is synthetic identity, I would expect that today, hopefully most of them should get caught, because some of the documents will no longer remain consistent.
Yes.
Thankfully, some of these checks have become more prevalent and online today. Like I can go to NSDL and verify the PAN details, or I can check that it is matching with Aadhaar and all that. So some of those things, of course, has helped in kind of identifying some of these at an earlier stage. But there are variants which are getting difficult to catch exactly on these basis, because in some cases it could, there could be just, the fraudsters are also kind of looking for new ways to defraud. And it's about trying to keep pace with that and trying to see that, okay, this is the new pattern that you are seeing, then okay, how do we kind of catch it? So it is, I think, an evolving thing, and which we will continue to work on. Clearly, in all of these areas, we will have to use technology as best as we can.
Yeah. Yeah, I mean, the way I see it is generally, I mean, fraudsters are using this technology. So they are using technology to do bad things. We have to have technology to ensure that how we are going to stop or perpetrate them from doing bad things, right? And that's where technology comes into the picture. So coming to Jaswant, right? So Jaswant, my question to you was specifically focusing around managing non-linear AI-driven risk, right? Specifically your take on that around it. Yeah.
The hot topic today, right? I think non-linear behavior. I think that's where the role of CRO in the today's world has evolved as well, right? And if in world, I keep saying it's a technologically transformative role today. So earlier, the CRO's role was more of a gatekeeper, maintaining the governance and making sure that is done. Today, they are like on every corner of the business, right? Because they are enabling the business in the right way. So coming to the non-linear thing, I think if we talk about the traditional fraud, we all know there was a pattern that you could read into. There was a linear behavior earlier, right? So it was very easy for the rule-based systems to catch that. Today in the non-linear world, it's very difficult because you're building up something that is dated you're building it today and tomorrow it's dated, right? Because everything is now being done through AI, the deep fake, the synthetic ID creation that Sugata was talking about. All of that is very sophisticated, and therefore the need of the hour is to be able to again use AI to beat that AI generated fraud, right? So, which can catch your non-linear patterns. I mean, if I can take a simple example in the non-financial world, right? I think we all use DigiYatra today, for example, right? Now, it's a great use of AI. Now, imagine if the DigiYatra was not built to capture the liveliness of the face. It could be misused, right? Because somebody could just take the face mask and just go in the front of the camera and can get access to the airport. Think of the disaster that could happen. So when we are building an AI, it is very important that it is built to take care of the worst case scenario, is what the banks are now looking after. So we are trying to build everything into the AI, trying to learn real time, making it more adaptable to the patterns that has never seen, because as I said, it's not a linear behavior anymore. Secondly, I think what is important in the non-linear world is also what the banks and the CROs are adopting is having a very continuous monitoring than the periodic audit, right? When you are having a rules, let's say when you have written today, it used to hold, let's say, for months or the years. Today that game has changed. So how quickly on a daily basis or a weekly basis, if not daily, you can monitor your models and a simple drift, if you can catch and see there's a pattern change, I think that's the way to go about it, right? Take a credit card example. I think that's where the most of the fraud happens, credit card and debit card, right? I think, again, a non-linear pattern. There was time when you see the credit card frauds increasing in the digital world, as Sugata was talking about. I remember 2024, that's when the credit card frauds went at the peak. And these frauds were named third-party fraud, the disputes, the transaction disputes. So people will come and say, I have not done this transaction, somebody else has done this on behalf of me. When you go deeper, you kind of realize that it's a mix of the two. While there can be 70% of the people saying it right, that they have not done, somebody else has kind of duped them, 30% of them are just fooling the bank and kind of saying it's a transaction dispute. What is happening, that it's very easy for somebody to now create, let's say, a simple thing called merchant category. They can just onboard themselves on any payment aggregator and say that I'm into this kind of a business, and that business can be just a fake created business, right? Now, if you just go by merchant category and say that, hey, fraud is increasing this merchant category, you may never be able to catch it. Because that one merchant that somebody has created is sitting in a thousands of merchants that is, doing good in your book. So how can you identify that? So simple non-linear behavior here, which is somebody sitting in that merchant category, but if I look at the transaction on both sides, how much transaction is coming onto this particular business from the group of customers and vice versa. And if I can establish the concentration between the two, that's a non-linear pattern and you can catch that. So how can I make my system more intelligent, more adaptive is what the need of today is. And that's what the CROs are adopting to kind of tackle the non-linear relationship, in my view.
So essentially, you're also talking about the peer grouping, right? As you gave an example, right? So, I open a fraudulent, apply for a POS device or open a business, but as a fraudulent merchant. But what you're talking about is that how I can ensure that a merchant of similar categories or merchants of similar categories across the board, how their behavior is, which is the 70-75%, comparing it the behavior of the merchant who has opened the account to look at a peer profiling and trying to identify patterns there, if I get it correct. Understood. Okay. Sorry. Mayur, you also mentioned about the processes, right, in terms of the mindset shift, right? So do you see that? Because, I mean, as you said, couple of years back, it was more of a manual driven, right? And now so it's a change, the change has to happen, which means you have to be more faster, agile, to what Jaswant also talking about, how agile you can be. Maybe the reporting has to be daily, sometimes for weekly, right? Because the patterns will change. So what is your take on how that change mindset shift has come, say, within your organization with respect to actually, yes, we need to take these steps, we need to be more agile, or we need to be adapting to these fraud threats? Right? Yeah.
So I start with the quoting some examples. So in housing finance, we typically face frauds related to property documents.
Yeah.
Which still remains a gray area right now, but we are adopting and using technology to a great extent to overcome that also. So I give you example, in past I have faced one fraud where entire chain of property documents was made by someone. So signatures was forged and exactly they were replicated as original signature of the customer, which was identified through forensic in that time. Then there were photographs which were put on was of a new customer. It's impersonation also. You can say deep fake also, because today's we are using this word deep fake, which like attracts everybody. So with that, photographs were changed, everything was changed. Recently I've started interacting a lot of fintech companies. So I have now come up with a solution for that. So what they have done is, like, we can upload scanned documents online. They will conduct a signature check through PAN card, through other documents, signature documents, whichever we have, on the property papers. They will match the photographs, which we use in other cases also. Like when we log in the case, we match photographs on the application form through PAN card, like how many percentage it is matching. So the same technology they are starting using on the property papers also. And they will match how old the paper is. And they have the technology to read any language of India. Like we have so many languages in India. Sometimes property papers are written in Hindi, sometimes in Punjabi, sometimes in Tamil. Whatever language is there, they can read and convert into English also. So such kind of new things are coming up, and we are really excited about it, because this is the area where we were facing a lot of problem in frauds. Sometimes customer is good, the seller is not good, and he tries to fraud with the customer. So that things are coming. Even I would say regulators have also evolved. They have brought CRO to dedupe match the properties. That thing has started to come up. All this has to be now an ongoing process. So earlier we used to have all these checks at the end of the loan, like when we are going. Now we can do it in real time, on the go. We are processing the files, and in the meantime we are getting all these results simultaneously. So by that time, like, customer is ready to take the loan, we are also ready with all the kind of findings we require for this loan. All the verifications are on the go only. So we need not to wait till like 15th day of the loan to be sanctioned. We can do it 2 days. So that again, I'm coming back to scalability. So every organization wants more customers these days. So in home loan, it's actually very long process. Like the day we log in the case and we disburse the case, it sometimes take 15 days, 30 days to do it. Because customer has to like first get the loan sanction, then he has to make the down payment to the customer, then he has to come up with the registration of the property. So it's a long process, which has now shortened by the AI, and it has become more easy for us to monitor all these transactions with the customer. Simultaneously, I would also like to bring notice to the RBI's mandate on early indicators.
Yeah, early warning signals.
Yeah. So that is also now can only be achieved with the technology. We cannot do manual Excel database, like we are doing 10 entries and checking it, like what kind of customer it is. We just need to put it in the system, and the AI and machine learning will help us bring the right early warning signals and red flag the case at earlier stage. And we have to like declare it in 1 month. So before it becoming a fraud case, we can do a red flag and do our internal, all the litigation things, maybe legal things, whatever is required, and solve the case before it is become a fraud case. So all those things, I think, are bringing a lot of like wider perspective from a CRO's point of view also. Helps you in governance to the CRO, and also this can be repetitively be applied, and it's having a trail being an auditable also. So it gives a very soothing feeling to the regulatory entities as well as governing entities also. Like we have RBI and NHB, so they also feel more confident, more like acceptable to the regulated entities that they are doing the right thing in this field.
Thanks. So coming back to Sugata, right, and you mentioned about value and volume in terms of the frauds, right? I just want to share some numbers with the audience here, right? So I was looking at the Indian payments report, and it was mainly around digital frauds, and I think 2021, if I remember correctly, the number of fraud cases which were registered were around 2 lakh or something, which has almost gone to 25 lakh plus in couple of 5 years. I think the fraud losses, that report which I was looking at, it was saying that fraud losses were around 550 crores. They have ballooned to almost 20,000 plus crores. So that's in just 4 to 5 years. And this is probably the period also during, the little bit period after COVID. So that's where it has gone. Now, in terms of how the challenges, right? So do you see that the collaboration is a key here, right? With respect to multiple departments coming together, it is probably not like, as we say that one department focusing on it, but it is more about looking at the data collaboration coming in from multiple departments, then looking at a particular transaction and saying that it is a possibly fraud. So basically the question is around how data collaboration will be a key here, right? Or business unit collaboration will be the key here. Yeah.
So the way we look at it, and here I am talking still primarily on the credit frauds only. See, even in credit frauds, the payment part is critical. We need to keep monitoring what kind of transactions a customer is doing. Some of the transactions may not be, the pattern of the transaction may not be aligned to the nature of the business they do. So if we are able to catch some of these patterns, then we can say that go back on the customer and ask, why did we do this transaction? And in some cases, you may get a genuine explanation, or in some cases, the customer says, okay, I did this transaction. Some cases, the transactions get reversed as well. So that kind of a monitoring when we do, we need to kind of collaborate with the team which is monitoring transactions. We need to also collaborate with the team which is, say, going on site and doing the customer visits. When they do a customer visit, they might identify certain patterns which are not aligned to what is happening. So when we look at it, ultimately it is this kind of a collaboration, whether it is the operations team which is going and doing a site visit, or even the business team which is doing a site visit, or it is the digital transaction monitoring team which is generating some of these transaction related alerts. All of it we kind of put together and then try to take a holistic view. And is it kind of fitting the customer's profile? So typically when the transaction monitoring alerts also get generated, I think to a large extent they are still based on relatively simpler rules. But when you put these rules together is when you really get that delta in terms of the identification, that is this really making sense? Just looking at the transaction, it's like, for example, when you look at a transaction in real time, there is only so much information that you can check. You may be able to check what is the transaction amount, you might be able to check who is the counterparty, you might be able to check what was the time of the day of the transaction, so on and so forth. So, but you are still limited to a relatively fewer set of parameters. But when you compare this or look at it in conjunction with the customer's profile, okay, this customer is in which industry, the counterparty is in which industry, and what is the size of this customer, and then you see that, put all of this together, then you get a better pattern and say that this transaction does not look right, or this transaction, maybe there's an explanation. And in some of the cases, just this much is not adequate. You may still have to go back to the customer and ask, why did you do this transaction? Some cases you might realize that customer did the transaction. Some cases it may not be a malified reason, but the customer may have a different opportunity. Just for convenience, you use this particular account. But in all these cases, the good thing is that if the customer is genuine, then the customer will probably reverse the transaction. And the customer will also know that you are monitoring it. The fact that you are monitoring makes a difference to how the customer behaves subsequently also. So some of these things we are trying to look at. See, there is all these information when we are putting together, we are getting a much better capability to catch these incidents than otherwise. The second element I'll just touch upon is that not entirely on the transaction side, but in general, in some of the components where we have used, say, some of the advanced ML models, we get a definitely much better lift than when we use individual rule-based alerts. So that is one of the things that we have seen, and clearly that is the way forward.
And makes sense, because the way I look at it is fraud detection is all about data. The more the data you can ingest, it can do better detection, right? And today the technology is available to kind of look at all those thousands of attributes of a customer, from a, say, location, device, and even transaction, to kind of then flag something as a risk, right? So coming back to you, Jaswant, right? So we are talking about kind of leveraging AI and kind of how it can enable better fraud detection, better customer experience, help us to revenue, have a better growth from when connecting the dots between the customer experience, the revenue growth as well, and fraud risk. Now, on one side, there are fraudsters who are leveraging the same technology, but they are not bound by any regulations, right, or lay of the land, right? They will just go about their job and try to perpetrate fraud at the industrial scale. And they are not answerable to anybody. But on the other side, we, as the banking institutions, are answerable to our customers, right? And that's where when we leverage AI, and how do we kind of, in your space, do you see that how we tackle this explainability problem, right, in terms of how did it arrive to right decision? Because tomorrow a customer can come and ask, why did you refuse this transaction, right? And in that case, that person will not understand the technological aspect behind the scene. In his mind, it is about this transaction has been stopped, which could be for the right reason itself. And he might be under scam spell, right, as the impersonation. So that's where, how do we bridge that gap in terms of the explainability of the AI, right? And the challenges, what do you see there? Yeah.
So honestly speaking, very difficult question. And I think the answer to which we are still finding, in my view, the explainability of the AI still remain, I will not say unsolved, but yet to be completely solved for, right, to be very honest. But having said that, I think, if we go back 4 or 5 years, I think sitting in a similar session, I think we all must be saying, at that time, data is the new oil and so is the analytics new refinery, right? I think great part is that we have crossed that phase. I think everybody has now built analytics like a bread and butter in the day-to-day life, as far as the FIs are concerned in particular. I think now we are talking about AI is the first thing that, how can we leverage data much more sharper and much more better. I think the answer to the explanatory part is, in my view, is always having AI with human in the loop. So for example, the 3 things that we always say in the fraud, that if we have to prevent the fraud, it is very important for the customer to have the control in hand by 3 things, right? What they own, which is something like the OTP that they get, let's say, to facilitate a transaction. What they have is something like their login password, and what they are, right, which is their behavioral metric. So if I can take a biometric, then nobody can impersonate that. So as long as these 3 things are taken care, what they are versus what they have and what they own, and then the transaction gets facilitated, I think explainability becomes very easy. So I think the way I look at it, that AI is like a super hire in the team who is brilliant, working at a superhuman speed, can give you 10 triggers in a seconds, and then it is up to the human to be able to rightly interpret what those are. So what is important, that when we're building any solutions with AI, how can I make it much more readable? That is important. And the way to do that is, how can you convert that machine answers into the EWS thing that our fellow panelist was talking about? How can I create that in a very plain English term and say that this is a rule that is getting kind of triggered, and then human comes in the loop and say that what has to be done. So I think AI with human in the loop is the governance framework that even banks are adopting, and having, again, the technology thing that the fellow panelist was talking about. Tomorrow, if AI gives us a trigger that this is not a genuine transaction, and the transaction, let's say, we decline real time in the transaction monitoring, as you said about customer friction, right? That's very much in the place. Fraudsters are not bothered about the fraud will be 1 in the millions, but for me, that's 1 is a loss, right? So how can I let pass that 1 million minus 1 and control that one particular transaction is what the AI is helping today. Meaning, how can I reduce by false positive and get 99% right? That is very, very important. Otherwise, customer friction will continues to be the problem. We can always pat our back and say that as a CRO, I have done my job preventing the fraud. But the fact is, I might have killed the business as well, right? Because a lot of customers would have dropped in the journey. So it's very important to maintain that balance. So AI being the superhuman, giving me the signal and explanatory through human is what I will refer this to.
Makes sense. It's more of an enabler for me to provide all the data points and then finally for me to be human in the loop to take that decision. And as you rightly said, because if I have bad experience on a credit card, right, then maybe I will move away all my accounts to another bank, and which is very quick. You can do it quickly today, right? So as you rightly said, not losing the business is also critical. Agreed. Thanks for insights, right, Mayur, Jaswant, Sugata. So we have a couple of minutes before we wrap up the session. Who'd like to take some questions from the audience as well? Please do ask questions if you have any, right? We can take like 3-4 questions if there are any. Yeah. Can somebody pass on the mic?
Hi, my question is for Jaswant. My name is Nir. So, you spoke about an entity onboarding themselves as a merchant with a clear intent of perpetrating fraud. Now, oftentimes these merchants are miscoded by the aggregator or the acquirer, which means their real line of business or activity is something else apart from, and therefore their transactions which would ordinarily have been caught by the transaction monitoring system pass through. How can financial institutions circumvent this problem?
Great question. I think the first thing which FIs have been using, and I think they should just kind of every day improvise upon it in my view, is having ways to categorize the company, right? So every company has to be listed on MCA if they are a company which is in the size of any nature. So of course the entity, how long they have been established for, what is the number of employees, whether the EPFOs are sort of filed on time, et cetera, kind of gives a multiple signals through which a company can be categorized into Cat A, Cat B, Cat C. I think that is first indicator which can flag as a in the transaction monitoring that there is something not so right, that this particular company that I'm onboarding. That is one. The second is, first of all, the payment aggregator itself, I think kudos to them. They themselves are evolving in this space, and I think what we used to see year to year earlier, I think that is coming down. So they are themselves doing a lot of compliance check, and that is helping out. But of course, as we were hearing, I think the fraudsters are much more smarter. It's a cat and mouse game. So more we eradicate, more they pop up, right? So it's a daily catching game. So I think to answer your question, how can we circumvent that? I think I spoke about the concentration, for example, right? So let's take an example. Let's take a big name here, right? And this I'm saying from the practical experience. Let's say not a fraudulent entity. Let's say Joy Alucas in Kerala, for example, very big jewelry showroom. Now there is a customer whose transaction on Joy Alucas I will decline. Why? Because when I look at this customer, transactions on Joy Alucas, maybe I as an entity, I as a bank don't have too much presence in, let's say, Kerala, for example. I don't have too many credit cards, let's say, as a product. I don't have too much offering there. I have very limited customer. Now this customer, if I look at the two-way transaction, how much of the Joy Alucas transactions is sitting in my book for Kerala versus this guy doing Joy Alucas transaction, both are, let's say, 70%. Then I know that, there is a concentration risk on both the side, and hence I should do something to this customer. So it's very easy to identify in non-Joy Alucas scenario where a customer or a customer entity is onboarded today with whatever MCC, let's say, right? There will be no real transactions in the past. So it's very easy for me to catch that this customer whom I have flagged, let's say, 10 days ago is coming today again and doing a transaction to an entity that never existed. Now that transaction on both the side, as long as I'm able to find the concentration, I think it's a great signal through which I can again bring the human in the loop and can take a decision. Does that kind of answer your question?
We can take one more.
Thank you so much, panel members. I think we have time for a few more questions. So anyone, please raise your hand. Yeah, can we have the mic? Yes. Please introduce yourself, sir, and the question to which panel member?
I am Rahul Agrawal and I am looking after fraud risk in SMFG Home Finance. So my question is more related to the home finance housing piece. We see a lot of AI happening in say identity risk or say income risk. But I just wanted to know two, three things like which is happening on the collateral front on AI. So we have a lot of deeds coming in, a lot of collateral documents coming in. Is there anything happening from AI front?
I just answered that in my example also. So I have come across few companies, fintech companies, who have started taking scan of the property deeds, and they are able to analyze those documents from a forensic point of view. So they can identify where their alteration is, his signatures are matching with the PAN card or any other signature proof, and they are also matching the photographs which are given in PAN card and in the real-time photographs we have capturing of the customer. What I still feel is lacking is there is no property dedupe right now for cases which there is no funding at all, or there is a forgery in the document. Multiple funding can still be tracked through SERSAI, but where the property is totally fraud, the existence of property does not exist. There is no existence of the property. We're still lacking over there. But for that also, few companies are coming and they're building a dedupe system for that also. I think whole AI is basically a dedupe system. It can be positive dedupe, it can be negative dedupe also. So, but there's no such dedupe for property right now for negative properties. Positive properties you can find on SERSAI, I think. Besides this, most of the SROs, most of the authorities, development authorities, they are also going digital. They are doing biometrics and they are also putting their papers online now. I think going down the line 4 or 5 years, we will be able to solve yet, but still it's a puzzle right now. I would agree with that.
Yeah, one more thing, on the identification of collateral actually. See, this is one big piece actually, because what happens is at few states there is a GIS system which basically, you can relate the survey number with the geotags and all that. But apart from that, actually, there's an issue related to the identification of collateral, which we face a lot. So, if there is anything happening on that.
Yeah, so I would like to take this offline, but okay, let's do it here also. From authority-related properties, I think we are still have identification. When it comes to non-regularized properties, we call khasra khatoni properties, jamabandi properties, then we do have problem in identification of the property. There, what we are doing right now, we are taking video recordings of the customer, we seller, buyer both come to the property and they give a video recording, this property I'm mortgaging to this person, selling this property to this person, and we are mortgaging this buyer. That kind of things we are doing. There is no government document to prove the identification of the property, like we don't have any utility bill for the property. Most of the time electricity connection is not there, so we don't have electricity bill. Most of the time they don't have sewerage or water connections. Sewerage is built, own self-built sewerage, like they have septic tanks and everything, so there's no utility for that. Sometimes roads are also not there. So that still remains a gray area, but we have to counter it by doing more of the customer involvement with the property. Going forward, I don't see anything coming from the authorities in this, but as an industry as a whole, we should interact more on that and should build some caveats or some way to identify the property. I think this is a thing is in progress right now.
Thank you. Thank you so much, honorable panel members. And I think we are right on time. Can we have a big round of applause for this wonderful panel here? First panel session of the day, and I think they did a fantastic job here. My, appreciation and congratulations for a successful panel. However, I would request the panel members to kindly wait for a few more minutes, as we would like to call on stage Mr. Nitin Sharma from SAS Institute India Private Limited to kindly felicitate the honorable panel. Nitin ji, if you could kindly come on stage, please. Please, welcome. And we will start first with the felicitation of Mr. Sugata from Axis Bank. A big round of applause, ladies and gentlemen, to Mr. Sugata for his wonderful contribution in the panel session. Moving next on the felicitation, Mr. Jaswant Kumar from IndusInd Bank. A big round of applause to Mr. Kumar for his wonderful felicitation and wonderful contribution in the panel session. Moving next in our felicitation, Mr. Mayur Mittal from Hero Housing Finance. A big round of applause to Mr. Mittal for his wonderful contribution in the panel. And now moving to our honorable panel moderator, Mr. Kushal Edwankar from Nice Actimize. A big round of applause to Mr. Edwankar for wonderfully moderating the session and also for his valuable insights. Would request the panel members to kindly step forward for a group photograph, and Nitinji, if you could also join them. A big round of applause once again, ladies and gentlemen, to this wonderful panel here. Fantastically delivered session, and I think great knowledge sharing. Thank you to all the honorable panel members. Thank you to Mr. Edwankar for wonderfully moderating the session. And thank you, Nitinji, for doing the honors.